Can you guys hear me?
They can.
Okay, so the mic's on. Okay, cool. So yeah, I wanted to run you guys through a little expose on fundamental analysis. Um, I know, there's everyone has a different type of trading strategy. Some people are short term, long term, swing traders, position traders, day traders. But I had the fortunate opportunity to meet with some people who've been on Wall Street. Actually, one guy who worked at an investment bank at Wall Street at Goldman Sachs. I met with two wealth managers in the last month for 7 and 8 figure clients, and they just kind of gave me a rundown of what they look for in stocks. And the interesting thing to note was in each one of those conversations, I talked with each one of them for at least an hour, sometimes 2, 3 hours. The interesting thing is they all, as a consensus, said fundamental analysis dominates price action. And when they said, the majority of their trading strategy is built around fundamental analysis. They do use technicals, don't be fooled. However, the technicals are almost like, the icing on the cake. It won't taste right if you don't have a cake. And so the fundamentals largely govern price action. That's what the big banks trade. And they have analysts and quants and number crunchers who literally get paid a salary wage to study these fundamentals day in and day out and come up with the best valuation model they can come up with for a stock.
John, you still there?
I'm here.
No, no. I can't hear John. Can you still hear John?
No, he cut out.
Hmm. Figure out what's going on.
Can you guys hear me? Yeah. Hello?
Yeah, you good. You good. Go ahead.
Okay. Yeah. So sorry, I got the signal cut off. I don't know what's going on. But basically, the information you're about to receive is from 7 and 8 figure earners. It's from wealth managers. So let's get into it. Talk about fundamental analysis. So, fundamental analysis, why we do it. This is why retail traders get boxed in the stock market. I just talked to Richard Currents. He was a risk management vice president for Goldman Sachs, and and this was huge. She gave me retailers say if you really be good at stock, you're not like you wouldn't loan a strain. Hello, can you hear me?
Yeah, it started getting choppy. It just started picking back up again.
Let me try this from a different device. Okay. All right. Let's see. All right. Let's see.
You need me to send the link somewhere else, or you could.
Just
So the thing that excuse me. Okay. So the thing that these wealth managers and institutional traders were imputing to me, telling me, is that most retail traders fail because they don't do their research. They don't do their due diligence. They cut corners. And when you take shortcuts, you get cut short, right? And so if you're not doing it fundamental analysis, you're really missing the big picture. You wouldn't loan some guy off the street $5,000 to start a business, but how many times have I seen somebody buy contracts in a stock, worth thousands of dollars, and they haven't done any fundamental analysis. They either heard the hype, they're either cold at their technicals and all that, but they're just dumping money in these stocks and they don't move the way they want them to. It's because you have to understand price action follows fundamentals, right? These institutional banks are running, discounted cash flow models, all kinds of valuation equations and, algorithms and stuff. And they're constantly trying to determine the value of a stock, because on the investment banking side of things, they have to monitor their tracking error. So part of them keeping their job is making sure, they're reducing their margin of error as much as they can. They're trimming off the fat from their trades. They have to be very precise, because they're dealing with tens of millions of dollars. Okay. So, and if you really think about it, you see big candles or big moves in the market and swings, who do you think's running that? You think that's for your retail traders or your investment banks? So, your studies go as far as the charts, that's fine. But if your technicals fail, then it's hard to really monitor your tracking error or see where you messed up. It's like, okay, well, I looked at my MACD, I looked at my RSI, I looked at all my indicators, I checked my support and resistance lines, everything was perfect, and the stock went completely the wrong way. Chances are it had something to do with a fundamental factor. It was either something in the economic news, it was either something in that company's own, personal dramas or whatever is going on in the company. There was something fundamental that happened, and that's why your trade screwed up, went the wrong way. It could have been a manipulation, but again, manipulations occur for such a short span of time, and they're so, I guess, inconsistent. You might get knocked by a manipulation in the market, but the chances are a lot slimmer than you might imagine. So, another thing is, a lot of people, they will trade stocks based, especially day trading, they'll trade stocks because they're popular, meme stocks, and they're looking for that high volume, that high open interest. They're looking for the aggressive growth. I see a lot of people now with, they're either in delivery as a service stocks like Uber and DoorDash. They're either trading what they call them weed stocks, sundial growers, and I can't even remember all the names of them, Tilray and Hexo and all this stuff. They're trading these stocks because there's tons of volume in them. They could potentially grow aggressively. You could make out with a huge bag, but you can also get smacked. And a lot of times those stocks will just have crappy fundamentals, or they don't have enough history where you can really understand the fundamentals or the true value of that company. They haven't been around long enough to have their bumps and bruises. And so fundamentals might not always match with price action. And so those stocks might have, crazy valuations. We saw this happen with Tesla over and over again. It was overbought for like an entire year. Me as a position trader, hell no, I'm not touching Tesla, because I keep most of my stocks around for years. So I'm like, I see something that's severely overbought and, it's like a 95 on the RSI. I'm not touching that with a 10-foot pole, because at any moment, the air could be let out of that balloon. And it happens to so many of these meme stocks and popular stocks. You've got to have I say that almost every trader should have an idea of the fundamental value and the true valuation of a company before they get in a trade. Because if it fails, at least you can go back to that and say, this could have been why. But an interesting thing to note, a wealth manager and multi-million-dollar trader, Jake Kasparian, I was on the phone with him, and that was about 2 weeks ago. And he told me that price, and it makes sense, that the price of a stock is never truly what it should be. And so the price of the stock you see is always hovering around some, ideal valuation with all factors considered, but it never reaches the actual value of itself. It's either always slightly underbought, slightly undersold, or very overbought, very oversold. So we just tried and I guess I should say speaking from the positional trading world, we just tried to understand what is that valuation of a stock, and how can that help me have some insurance or security when I jump into a trade, knowing that this is my potential downside risk. If this stock is trading, it might be at the bottom of the Bollinger Band on a 15-minute chart, and you're like, hey, let me jump in for a quick day trade. But again, it might be, overbought on a daily, weekly, or monthly time frame. And you have to know that risk. If it's sitting at, say there's a stock XYZ going at $90 and it's valued in at 75, and you've done valuation models, well, even if it's, a 10 on the RSI, the bottom of the Bollinger Bands, at a 200 EMA and everything else, at the end of the day, it might slide back towards its value. And so for position traders, we kind of know that intuitively, but even as day traders, you want to be tuned into the fact that, you got to know what the analysts are saying. You got to know what Wall Street is saying about that stock. You just have to. And if you don't, you stand the risk of getting clapped, like we say. So, I covered that again. Price hovers around fundamentals over time. But so what we look at is we look at financial statements, and that kind of tells us, the strengths and weaknesses of a company, why these analysts are, valuing in stocks as they do. A lot of people use tip ranks. I highly recommend tip ranks. A lot of my mentors, yeah, stop drawing on the stream. I don't know what that is, but somebody's writing on my PowerPoint. It's okay. But I would say I've studied under the tutelage of Tim Sykes, Tay Sweat, Chris Johnson, Wealth Squad, everyone, all kinds of mentors who are making millions of dollars in the market. And you've got to know what the analysts are saying. Yeah, tip ranks. So tipranks.com, you've got to know what the analysts are saying, because I guarantee probably like 95% of the people in this chat do not study stocks for a living. You guys are not digging into balance sheets and financial statements on the SEC.gov website every day and crunching numbers and running through, all these equations and algorithm stuff. There's just not enough time today. Most people are trading stocks, they want it as a second source of income. There's a few professional traders, but even then, if you're not truly on the fundamental side, you're trading technicals, or you're getting your fundamental advice from experts, right? You go to Robinhood, they got the if you buy the gold thing, they you can hear what analysts are saying. If you go to Morningstar, Benzinga, all these websites, they're talking about what are the analysts saying. 9 say buy, 1 say hold, 2 say sell, whatever. Those people study stocks for a living. Why not take their advice? So, and I bring dating analogies into stock, conversations, because it's relatable. I mean, most people look for a significant other, have one, et cetera, et cetera. You don't cold date somebody that you're invested in. You want to get to know their lifestyle, their decision-making process, how they handle money, attitudes for maybe religion, all this other stuff. You don't want to just be dating somebody to date somebody. That could wreck your life. You know what I mean? And unfortunately, it happens to some people. Same way, but especially with your money, if you date somebody and not dating somebody, you don't want to just be throwing your money at anything, burning it up. You want to have strong convictions for why you're doing what you're doing. And as Mr. Currents from Goldman Sachs told me, you want to, he said, the stronger the reasons for your choice in investment, the stronger your returns. So the more points of, I guess, validity or verification you have for a stock, the more likely you are to come out with a profit. And so for me and Joe, we both run Nashville Investors, a crypto and stock Facebook page, probably the largest community of stock and crypto traders in the Nashville area. We see 2 things in fundamentals. One is the overall economic environment, and 2, your company of interest financial statements. So you want to look at the main 3: balance sheet, income statement, cash flow statement. If you do these in sequence, you'll be pretty well off as to whether you need to be making that trade or not. At least I can say that as a position trader. I'm not too heavy into day trading, but I can certainly say that for position trading. If you've looked at the economic environment, your company financials and balance statements and cash flow statements, and then done your technical analysis and everything else and have a trading plan and all that, you're going to make profits. Okay. So the economic indicators we use, the part 1, we use GDP. That tells us what our economy is producing as far as goods and services. It gives us a dollar amount. You got real and nominal. That's all more in detail. We can get to that later. CPI and PPI are price indices. The Consumer Price Index tells us how much a basket of goods that consumers produce would cost. They index it at 100, I think, every decade, and so there are reference points as to how CPI has risen and fallen in reference to some target year. And it basically tells us, like, are things getting more expensive or less expensive as the economy progresses, as economic cycles progress. Now it gets a little tricky because the basket of goods changes every few years. People weren't using iPhones and tablets 10, 15 years ago as much. Maybe a couple of people had some, but iPhone was a new thing in 2007 or whatever. So the basket of goods has to change and be updated, several times a decade. So CPI is a rough number, but it helps. PPI, how much does it cost to run a firm? What does it cost producers to buy their goods and manufacture their goods? Again, another reference point for understanding how strong or weak an economy can be. If things are more expensive, probably an inflated economy. And then that brings us to interest rates and federal funds rate, or AKA the federal funds rate. It tells us what's the cost of borrowing money. And guess what? Institutional banks who move price action, who move these big swings in the market, even little swings, they throw in a couple hundred contracts, you might move up a couple ticks. All right. So they are constantly monitoring these interest rate changes and hawkish monetary policies and dovish monetary policies. They want to know, is the government going to let them do their thing, basically, because they love borrowing money. They love borrowing money, millions of dollars, hell, billions. And so if we have an extremely hawkish economy or economic stance, and Jerome Powell was over here talking about, we raising things up several hundred base points, whatever, they're like, whoa, we can't just be borrowing all this money now. And they're going to be a lot, their trading style changes, their trading plan changes, their portfolio management changes. And this is literally coming from a portfolio manager himself, right? So they can't, be so willy-nilly about these, high growth, aggressive stocks when, interest rates are getting jacked up. So they've got to cut back a little bit and say, all right, maybe we need defensive stocks to add to portfolio. Maybe we need, some nice fat blue chip stocks. Listen, the 9 stocks, the 6 stocks in America, G Mafia, Google, Microsoft, Apple, Facebook, IBM, and Amazon, they're not going anywhere. And the government needs that shit sorry to cuss, but they need that in America. They literally need those kinds of stocks to be around because they fucking drive America. I mean, can you imagine what the hell we would do if Amazon shut down tomorrow? Like, people would lose their mind. Can you imagine if Facebook just shut down? You saw what it did in Russia when they cut out of all the social media platforms. People were pissed. Like, IBM, if they shut down IBM, like, they need these big blue chip stocks, and so they're safe investments. So institutional banks and investment banks and all these huge traders and even hedge funds are looking at that federal funds rate closely. So you better believe it's creating changes in the market. So you might be in a damn day trade, and federal minutes come out, and bam, price actually gets whopped, and you like, your contract is just shot. You just got to take an L. Well, if you knew what time that, monetary policy meeting was coming out, you might have said, well, I'm not going to trade around here. And for position traders, we might cut out early. We're like, I don't want to mess with that, because if they bump up in interest rates 50 base points, they're like, I'm getting out of this. This is a one of those dreamer stocks, I call them. And then we look at unemployment levels. So unemployment levels have a opposite effect. Most people think, high unemployment means bad stock market. High unemployment actually can be a positive thing. It could be a bullish signal for a stock market. And there's a couple reasons for that, but mainly it regards the idea that if you have low unemployment, for example, it means that the economy is strong and they're adding more people to the workforce, and a lot of that bullishness is priced in. And so the market is already a bit overbought and is preparing for a downturn. Conversely, not a lot of workers. Again, people are sitting around, how else can we make money? How else, what do I need to be doing when the economy is slow? And so it has a reciprocal effect, but you would think that a high unemployment rate would mean bad news for stocks, but it's actually kind of a good thing. And low unemployment can be a bad thing for stocks. right? We saw when unemployment hit record lows this year, the stock market went down. So you got to pay attention to all these things. So once we've looked at the economic environment, now we're into the nitty gritty. You pick a stock. What are you looking at? So when we pick stocks at NICS, we call out plays for our members. We're looking at the income statement, balance sheet, and cash flow statement. Income statement is going to tell us about our revenue, expenses, and profits. I'll try to see if I can pull this up on my phone on TradingView. But we want to look at, I also recommend Yahoo Finance. That's a great one. Bar chart, stock charts. There's a lot of free resources. FinViz that have company statements. And if you really can't find them, you can actually go to the sec.gov website and get their annual statements, their 10K forms and stuff like that. But basically, income statement tells us about revenue, expenses, and net profits. And that tells us if a company is bringing in money from their operations or losing money. You know, where's their money? Is it sticking around or is it going? And EBITDA is also a useful indicator on that. That's earnings before interest, taxes, depreciation, amortization. It's basically just your raw earnings before they factor in other expenses. So you want to look at those from your income statement. You want to look at your balance sheet. That tells us about our assets and liabilities. So basically, if you think of assets, they're things that generate money for that company. It could be equipment, machinery, a fleet of cars. It could be anything, you know, technology, whatever, software, intellectual property, whatever. Now Bitcoin is considered an asset of a company. Some companies are like Square and MicroStrategy are buying up Bitcoin because they think it's going to appreciate and turn into a huge asset for their company. And obviously that stock price will go up. And then liabilities is telling us what are these things or entities that are burning money in that company. Maybe they owe a bunch of debts. Maybe they have obligatory contracts that are, you know, dumping money out of their earnings. You know, we don't know. But, you know, if you want to study a company, you want to know what are their liabilities and are they keeping them under control? And you definitely want to know that ratio of assets to liabilities or your equity. So you want to know, or I shouldn't say it's a ratio. Your assets minus your liabilities is your equity. And that tells you how much is a company basically has more money generating things than money burning things. Okay, so if you see a growth in equity, that's a great sign for a company. And if it's oversold, I'm definitely taking a look at it and seeing if I can jump in a trade there. So then you've got your cash flow statement. So is cash moving in and out of the business, and in what ways? And, you know, how are they monitoring how cash moves around a company? Is it liquid, illiquid? Like what's going on there? And so they've got 3 different factors there. You've got investing cash flow, you have operational cash flow from their operations, you have financing cash flow, but you really want to pay attention to free cash flow. It basically tells you how much liquid cash a company can just dump around and put into investments or play around with. The more free cash flow you have, generally speaking, for me, that's a stronger company, you know. And you see these behemoth companies like in the G Mafia that have tons of free cash. So it's a big metric. And from these experts that I've been speaking with over the past, I would say 6 to 9 months, when we started doing interviews, they all say follow the money. If you want to know, if you literally want to know what a stock's going to do in the next year, follow the money, follow the contracts, follow the agreements, follow the moves they're making in the company to add assets, you know, decrease liabilities, you know, trim off more profit, you know, all that stuff. It wouldn't hurt you to listen to an earnings report or two, but hey, that's positional people. So these are things we look at in company income statements. And if you guys want to know more, I dig even more in depth. We have 2 ebooks. They go for $20 a piece. I sent the link right here is to the bundle. I could drop my email in the chat. You guys can pick up a copy and tell me what you think. Like, if you're not sure if you want to get an ebook or whatever, talk to me. Like, I'm on Facebook. Shit, you can find NICS anyway. If you want to drop that link, Jordan, just let me know where you're at. And if fundamental analysis is something you want to dig into, you know, let's talk about it. You know, shoot, I might drop you a deal on the book or something, you know. But we really just want to get this, disseminate this information and get people, to realize that these are real I want to say living entities, but companies are real things. Like they're modular, they're dynamic. You said, can I go back real quick? Somebody just texted me. Sorry,
Hey,
I'm new to this.
John, hey, John.
Yeah.
Go ahead and finish what you're saying currently, and then if you're open to it, we could do a quick round of Q&A for what you just covered before you go into TradingView or Yahoo Finance and actually look at the numbers.
Okay, cool. Yeah. So, do you guys have any questions? How do I get to the, trying to see how I get to the comments. Oh, here we go, chat.
Open the chat. So if you guys have any questions, go ahead and put them in the chat for the next, maybe 10, 15 minutes. We can cover things that we just went through on the slides. And then, John, we can get it set up. I know you're sharing from your phone, but if you could show those numbers and financials and maybe break down a couple of stocks on Yahoo Finance or TradingView, that'd be real good.
Yeah. Do I use RSI when finding your, sorry, let me go back to this chat thing. Do I use RSI when I'm doing swing trading, basically? Yeah, absolutely. I've actually bumped into a couple of really nice trading opportunities. If you guys want some freebies, both PayPal and Square paid me like massively this last couple months because I think they were heavy on the RSI, was super low, and the MACD was curling up, and it was just like opportune. And like, I don't know how more people didn't see it. I guess people saw Square because it jumped up like $50 in a week or something crazy, but I absolutely use RSI when I'm swing trading. Any other questions? Do I use VWAP? Yes and no. I'm not a huge fan of VWAP, at least for what I do. I do know it has a lot of utility with like day trading and quicker in and out trades, because price actions above VWAP is a good bullish signal. But if you guys want to know, like, for me, what's really helped me, like, I guess, create steady, consistent profits and income from the stock market, it's using signs of confluence, right? So the major, and if you guys get our book, you'll get our whole formula. But the main indicators we use the EMA ribbon. We have a short-term and a long-term ribbon. We use MACD with 12, 26, and 9 settings. 9 being the EMA of the MACD line itself, and then the 12 and 26 for the short-term and long-term. We use RSI. We use Bollinger Bands with a 20-period average. And then the biggest thing, though, is drawing lines of support and resistance, especially, and you guys want to scale in, like, use time frames. So we start on the monthly, we draw our support and resistance. Then we go into, drawing channels. Then we'll go into the weekly, draw, support, resistance, and channels. We go into the daily support, resistance, channels, hourly support, resistance, and channels. So you have 4 levels. And what that does is you obviously, when you zoom in, you'll see levels that you didn't see on the larger time frames. But excuse me, one of the reasons I took that Square trade and came out with the bag so heavy is because it was on a monthly, like, massive support level and like a 200 EMA. That's like a strong signal. That is like, okay, take my money. I'm gonna sell my car today, damn it. Like, you definitely, like, you want to pay attention to support and resistance because those are supply and demand zones, right? And that's another part, that's the economic part that people miss, is like supply and demand is huge. That's telling people when they want to buy something, when they want to sell something. Let me get to some of these questions. So yeah, signs of confluence. If 2 or 3 or even 4 indicators are checking out and you're at a huge support level or something, or resistance, you're trying to do puts or short a stock, yes, like, use signs of confluence. You will most likely come out with that trade in your favor. That's only for day trading. Yeah, so VWAP's kind of like day trading. Do I use Elliott waves? Elliott waves, yeah, some people like them. I'll take a peek, but I'm much more in favor of using channels and support, resistance, supply and demand zones or areas. I've been studying NVIDIA today. Would you mind breaking down their financial? Yeah, we can get to NVIDIA. Why not? what do you mean by position trader? Okay, so you've got different time frames in trading plans. So you've got day traders, they're on those 5-minute charts, 15-minute charts, hour charts, half-hour charts. They're trying to get in and out with the bag within a day. And if you listen, there's a book called How to Day Trade for a Living by, what's his name, Andrew Aziz or something like that. And he talks about, he's like, if your trade lasts longer than, 4:30 Eastern time, that is no longer a day trade. Like you are officially a swing trader. Like some people are more flexible, but there's day trading, there's swing trading, which is like, like a couple days to a couple weeks. There's and then there's position trading. So we basically hold stocks or contracts on options for months. And stock makes a huge move, getting out. But so we're happy with holding a stock for several months, looking at price action, monitoring our risk, and looking at our supply and demand zones. Some of my trades not expiring until like 2024. So position trading, we jump in the position, we just sit and wait. Do you trade LEAPS? And if yes, for a small account, what do you recommend? I'm not. I said, Jay James, I'm not understanding LEAPS. Are you talking about gaps or?
LEAPS are just positions that are longer than 6 months. There's longer
You
term.
You said what now?
LEAPS are just referring to those longer term options that are like 6 months and how longer.
Oh, okay. Yeah. I definitely trade long-term options. I rarely take options that are less than 4 months. And the reason for that, I mean, unless I'm day trading and I got some money to play around with, but the reason for that is I was keyed in by a Wall Street expert, actually, who was talking about, or an institutional banker on Wall Street. He was talking about how they, these investment banks and hedge funds actually use machine learning and AI, or machine learning technology, to predict volatility based on retail traders from B-book brokerages. So basically you got A-book and B-book brokerages. So let me not give you false information. One of the types of brokers, and you'll have to, go do your research. It's either A or B. They're allowed to sell your trade information. I know Robinhood does it. And there are a lot of other ones that, hide in the shadows, and you'd be thinking, oh, I'm doing fine. And they're giving your information right to a high frequency trader so that they can trade based on your information. And so they look for patterns of volatility on these apps, on these little commission-free trading things. Like you don't think Robinhood's gonna not get money out of you? Like they're commission-free for a reason. So they study this with machine learning. So they're like, they know retail traders cannot hold their damn piss for more than 3 months. Sorry to cuss, but I'm just real about it. They know retail traders are impatient, and they clap you guys because of it. Like they know you guys are gonna buy the 1 month, 2 month, 3 month contracts. So what they'll do, one, they'll manipulate the hell out of the market. They're gonna stop loss hunt the hell out of you. And then two, the government's in on it too. Like they will throttle stocks because they can't have the whole market going up and down in unison. If all stocks went up at the same time, all stocks went down at the same time, people would lose their minds. Like, you get these huge swings in the VIX, in the total indices, and then everybody would try to sell at the same time. You get a huge swing down, like it wouldn't be sustainable. So they throttle some stocks. And if you're in these short-term contracts, you're gonna get smacked around because you might say, oh, I just know it's going up. The seasonality is at 90%, and I did all my technicals. It's 15 signs of Confluence. And then look, they hold the price the same fucking place for 2 months. And you had a 1 month expiration, and your shit's sitting at negative 99% profitability the whole contract. Like that happens, and I've seen it happen. It's happened to me. So you got to understand those things too. Sorry, I'm trying to scroll up. Okay. So yeah, I hope that answered your question about position trading and trading LEAPS and all that stuff. So yeah, I buy insurance. That's basically what you're doing when you get longer contracts. I'm not screwing around with, oh, please go, praying to God and then getting smacked around by the market. No, I'm not a fan of that. NVIDIA over 242.42 for calls. I might have to look some of this stuff up on TradingView. I don't trade NVIDIA right now. I was in AMD, but What is a better EMA or SMA for short and long-term trade? Okay, so there's different strategies. Those are also in my book. I use the 20 over 200 EMA. That's a strong sign. Like when the 20 crosses over the 200, it will typically continue in that direction for quite a while. The 50 over 200, the golden cross, and the opposite of that, the death cross, when it crosses down, those are very strong indications that a stock is going to move in a direction. So for short-term EMA ribbons, I use the 5, the 10, the 20, and the 50. And the long-term ribbon I use is the 20, the 50, the 100, and the 200. Prices tend to respect that. And a lot of people say, do you use EMA or SMA? I use the EMA because it's a lot more sensitive to price action. And I would say most traders nowadays use the EMA. It just doesn't respect SMA. The price action does not respect the SMA as well. What makes a company undervalued in your eyes? Like what ratios? Okay, undervalued. Again, I look at my analysts. I look at, how many saying buy, hold, sell, why, what's the tracking error of that analyst? Like how have they been performing? And TipRanks has all that on their premium stuff, but they have a lot of free stuff too, which is awesome. I look at institutional ownership. If a high percentage of companies or trading institutes and investment banks are holding that stock, guess what? There's a reason. There could be 100 reasons why they sell a stock, but there's one reason why they buy a stock, and that's because they think it's going up. I use asset turnover ratio. There are a bunch of them, but I include them in my book. And I basically look at price targets, right? You can run a discounted cash flow model. There's an equation for that. And so if it doesn't make sense, and the price is sitting way above or below those, you know that something's up and that price is going to return. And then if you just want to do the quick and easy, you can get Bollinger Bands, the RSI, and the MACD, and you can kind of follow momentum and price action to find out if it's overvalued or undervalued. Will you show this or just breaking each down? I can show some charts. I'm in PayPal and been in for a while. What's your target? Can you explain how you set one? So I'm not going to get into all that in this conversation, but you use what's called a discounted cash flow model. You got to run some numbers. I take shortcuts sometimes, like because I have all my positions in for the year pretty much. I mean, I may add positions or, whatever, trade it up and down, but I only trade like 4 stocks right now. And I am actually trading PayPal as well. It's kind of funny you mentioned that. And so another thing I'll use is, just out of convenience, I'll use TipRanks. And then those analysts will explain, they can assert their position and why they feel that way. But yeah, I also use channels. If I see something sitting at the top or bottom of a channel that's been respected for several years, I can set that as my price target. I can set the top of a Bollinger Band as my price target. There's a lot of different ways. But if you're in PayPal, sit tight. I think that thing gonna go up. Can you get a good idea of which direction the stock will go after earnings? No. Quick answer, no. Sometimes you see a company beat earnings and plummet or miss and skyrocket, or do you stay away? I stay the fuck away from earnings, because they will manipulate the hell out of those too. Because they know retail traders, like if it's an undervalued stock and it's got heavy volume like Snapchat or something. I think it happened to Snapchat this year or last year. Like they know retail traders, oh my God, financials are great, and you think you're getting in early, and then the earnings drop and it drops down $20 or $50, something crazy, Obviously Snapchat can't fall $50, but some of these other companies, Peloton, there's a bunch of stocks that have been smacked around by earnings. I do not trade earnings at all. I'll listen to the earnings call, but again, once I make a positional trade, I've done all my research. I don't really need to pay attention to the earnings calls. Can you finish what I was saying about NVIDIA? Not sure. Were your Wall Street friends able to share precisely how they use fundamentals as a primary trading tool? So yeah, basically everything I'm discussing, I don't, if there's a specific question you have, but yeah, everything I've discussed, they verify that they, check those things as well. Can you show examples on TradingView? Yeah, I can definitely show examples. What delta do you use for longer term options? Deltas, it don't really matter to me. Obviously, if I buy longer term contracts, the delta is going to be higher. If you have more questions, okay, so I'm gonna skip ahead. Hey, Jordan, you on here?
Yeah, I'm here.
Okay, so I'm gonna skip ahead and just kind of run through some of this because I see links and stuff. The feds need to manipulate stocks. Okay, so do you want me to run through a chart or?
Yeah, so what I want you to do is go ahead and just show maybe an example of one or two past trades, breaking down why you entered them, what you saw on the
Okay,
chart, and then as well as because we're talking about fundamentals more than technicals here, digging
all
into
right,
whether it's on Yahoo Finance or any other source, digging into the numbers and what you look for.
cool. So these are my babies. This is my stock picking list right now. I'm not trading all of them.
You're still sharing the Google Slides.
Sorry.
You're still sharing the Google slide screen right now.
Oh, how do I get out of that?
So maybe stop the share and then
Stop share. Okay, back to me.
reshare.
Okay, so can I share a screen? Oh, screen. Okay, screen broadcast.
Yep,
Hold on. Am I sharing my screen yet?
not yet. So you're gonna pull up the screen that you want to share and then go back and hit screen broadcast.
Okay. All right, let me jump in here. Back to screen share. I'm gonna share my screen now. Screen broadcast, start broadcast. Okay. Is my microphone on? Hello?
Yeah, your microphone's on and now we can see your screen.
Can you guys see my phone?
Yeah, we see your screen.
Okay, cool. So I need trading view, right?
Throw that do not disturb on too.
Okay. So y'all there?
Yeah, you're good.
Okay, so these are my babies. This is my stock screen. These are companies that I trade. I was actually peeking at NVIDIA. We could look at NVIDIA. Did you want me to run technicals or you want to run the financials on it?
Primarily
The financials. Yeah,
Okay,
financials.
financials, cool.
But you could do the technicals too because everybody sees technicals different, but primarily financial.
Right. Okay, so here's a cool thing. I go to the daily chart and you guys will see these little earnings reports at the bottom. You click one of those, it'll say, okay, earnings, revenue, and you want to pay attention to the reported versus the estimate. With those, you really want the actual reported number. But again, I don't trade financials, or financial reports or earnings earnings calls at all. So I'll look at the overview. I start out with the market cap, really, so that just tells me the price tag on those shares, how many shares were traded. That's basically the dollar amount of all the shares that are out there. Price to earn, I don't care about dividends unless it's in my dividends portfolio. NVIDIA is not. Price to earnings. So price to earnings right here is pretty damn high. I would want something under, let's say 20, maybe 25 if the rest of the financials were great, but 62, that's inflated. So I don't have a lot of confidence with that. And I look at annual and quarterly. I'm just going to do the annual. Earnings per share, decent. You just want a positive number for me. Income statement. So I'm paying attention to total revenue and net income. In these two metrics, you obviously want to see increased net income. That means they're able to hold on to more money. And then you want to look down here, scroll down to total operating expenses, pull that up. Expenses will increase as a company grows and scales, so don't get alarmed. The main thing you want to see is that your revenue is outpacing your expenses. You do not want expenses to outpace your revenue. That is a failing company. Balance sheet. So we're looking at assets versus liabilities, and I can see right here, NVIDIA is running into sort of it's kind of tapering off in terms of this growth. So you want your assets to be outpacing your liabilities, obviously. I'm gonna throw up equity on that chart. So I'll go down here to equity. Equity's increasing year over year. That's a great sign. That's very bullish for me as a position trader. And the company, this is in the billions, tens of billions. Like NVIDIA is a huge ass company. Like that alone tells me that they're not going anywhere. So I'm looking for any sign that it's undervalued, right? Because if a company is strong as hell and it's sitting at the bottom of the Bollinger Band on the monthly, it ain't gonna stay there long. That's a fact. You could look at a company like Apple. They have incredible financials. Do I trade Apple? Not often. It might be good for day trading, but position trading, it's just not going to move enough. I'm not going to make a great profit. I'm holding on to this expensive ass contract just to move up a few dollars. Like, no, thank you. So, but great balance statement or balance sheet, financial statements, and it's not going to, like, they're not going to get rid of Apple with $2.7 trillion of market cap and all that stuff. They're not going to get rid of NVIDIA with $500 billion of market cap. Like, they're sitting tight. And so when we're in these crazy times, yeah, it's good to trade these nice fat companies because they got, some meat on their bones. But yeah, tens of billions of dollars in assets, total equity nearing or passing 12 billion, 16 billion, 26 billion. Yeah, that's a big ass company. Like they're good. So I like what I see here. Obviously with growing, main thing is growing equity. Book value per share. I don't really trade book value because especially with a tech company, because they have all these softwares and stuff. Cash flow. So cash flow, I don't really pay attention to the investing and financing activities. So that's all buying and selling stocks and paying out their shareholders and all this stuff. Main thing I'm paying attention to is free cash flow. And so I'm seeing NVIDIA having from 1 billion to 1.5 to 3 billion, 3.14, 4 billion. They have increasing free cash flow. They have a lot more money that they're able to play around with. That's $8 billion. That's no joke. You can buy companies with that kind of money, just cash. So love that. NVIDIA is a strong ass company. Like, they have great financials, and that's why tons of retail traders trade them. Tons of banks trade them. And then, you can look at some of these statistics in the back here. I don't know why these are highlighted. Actually, I will keep PE ratio. Did you say something?
Yeah, John, can I ask you some specific questions?
Sure.
So, what caught my eye on the video today is it, like, over the last, I guess, 90 days or so, it's dropped below the 200 EMA several times. So I started doing, just some research, and then I noticed that, some analysts had downgraded the stock's buy level. There were some basically chip problems being reported, and it looks like people are going to start scaling back on chip purchases. And then it was something else that caught my eye. Oh, they are going from 4 billion shares to 8 billion shares. Or they've requested to go from 4 billion to 8 billion, which made me think, if they're doing this funding raise, whether it be for, research property purposes or whatever the case may be, they're in need of some type of money that they're seeing. So then I went and looked at the financials that you just looked at via TradingView, and then I saw something about like there had been like some negative returns from investments, and I didn't know what that meant in regards to like negative returns on investments versus just operating expenses. I don't know if they invest their own money and try to get investors. I don't know how that works, but can you kind of shed light on some of those?
Sure. So negative cash flow from investment activities. And the reason I don't get in, I'll be honest with you, I don't get into all that. I don't have the time or patience to get into like cash flow statements as much. I let someone else kind of manage that for me and run it by me. I got a lot of different things in the fire. But what I can say is this: there are a lot of reasons why a company would liquidate stock. A lot of reasons why shareholders want to pull their money out of a company, et cetera, et cetera. But at the end of the day, is more cash flowing into that company or out of that company? And when you're talking about they have tons of free cash flow hanging around, they're not having tons of free cash flow if they're owing investors. They're not having tons of free cash flow if they're not getting financing. They're not having free cash flow if their overall cash flow is screwed up. I'll put it that way. And there are specific companies that you can look at. You can look at some failed companies or companies that went bankrupt and run through their financials, and you'll find out 99 times out of 100, their free cash flow was entering a negative zone, or it was severely negative, and then they just cut out or got delisted. So I don't really get into cash flow from finance and cash flow from investing activities, because it gets really murky, right? Sometimes companies, like you'll see this all the time with what's his name? The guy that runs Amazon, Jeff Bezos. You'll see him just liquidating stock all of a sudden, just millions of shares. Just Jeff Bezos needs several $billion, and he'll just dump off, sell off a lot of stock. And then, it affects their cash flow statement, of course, because he's dumping stock. Does that mean that, Amazon's in trouble? No. He might be building 10 more factories. We don't know. So it gets murky. And that's why I don't pay attention to a lot of cash flow statement metrics, except for free cash flow and operating or cash flow from operating activities, because that tells me, are they making money from their operations in producing goods and services? Does that kind of help?
Yeah, appreciate it, man. Thank you.
And then I just wanted to touch on that. I'm looking at this chart on NVIDIA. I just wanted to touch on that 200 EMA. What was that on? What time frame?
I'm looking at the daily time frame right now.
Okay, so I want to point out something right here. Okay, you're hitting right here. If you can see my screen, this little area here, that is a demand zone. Okay, it has popped that demand zone 1, 2, 3, 4,
exactly
5, 6 times, and it's coming back to it. Now, I have I want to say, let me just find out where the 50 is. I'm not getting nervous until I see that 50 cross the 200. Then we're in deep doo-doo, because that tells me we have a death cross. But from what it looks
your
like,
50 is the yellow line.
Yes, the kind of yellowish golden line, whatever.
Yeah.
So red's your 200. When I see that 50 turnover and dip below, we're in deep trouble. I'm looking at this RSI, and it looks like it's getting toward oversold. So you can also run speed lines on your RSI if you want, trend line. So I'm seeing a trend here, right? It might just bounce that. Draw it less sloppy. It might just come down.
And that's also an inverse head and shoulder too, though, right? So, I mean, we could almost, possibly predict a bounce off that supply zone back to the upside, right?
Well, again, that's why I look at economics, right? We're in the middle of a war I don't know if it's escalating or not. Like last I heard, they were pulling out of the capital in Kyiv, and then they were bombing the hell out of some other region in Ukraine. And, so we got political issues. We got China meddling in that crap. Then we have, interest rate hikes going on every 6 weeks. So the economy hasn't been shaken out totally. They're still, Biden and his cabinet and the Fed is still trying to grapple with inflation. So if they can figure it out, and if Wall Street's happy, the economy will be straight. But if they can't figure it out and they got to raise it 100 base points, you might get a death cross there. So I'm always monitoring that. But I will say this, on this daily, if you do see another bounce, it's headed to the upside. And the 200 EMA daily is a strong support level, or if it's on the downside resistance level. Like if you're hitting a 200 EMA, that is a strong boundary. So I wouldn't be too concerned. It may dip below, but see, that's where they get y'all. That's where they get retail traders. They know, oh my God, it passed the 200, and you freaking out and you sell your position. They're like, all right, shoot it back up. Like they call it a demand zone for a reason. Yeah.
See, that's what I'm concerned about too. Like they clearly predict the psychology of retail traders. So like most people are going to buy, some puts here, but it seems very likely for it to go back up to the upside. I just, but you just don't know.
Right. So it, again, and this is why it's part of the reason I position trade. But if I were a day trader, I'm looking at a different set of indicators. And Jordan he's a mastermind when it comes to like day trading. He's actually teaching me things. I would look at those indicators and those trading plans, because here's another thing. This came from Jake Kasparian himself. He made $2.6 million on Tesla options in 1 year. He quit his job, and now he's a wealth manager. Okay. He said this: it doesn't matter what the economy is doing if your trading plan is cold. He didn't say it like that, but that was the gist of it. He said, it doesn't matter what the hell's going on. He said, there could be meteors falling from the sky. If it doesn't have anything to do with your trading plan and your risk management and your lot size and whatever, or position size or contract size and what you're trying to do, don't worry about it, right? It's the way Tay Sweat says it. He says it's like a rocket ship, right? If you're blasting off in a rocket, you're free floating in space, right? But so you can bounce between Bollinger Bands when the market's going up or consistently down. It's in a downtrend. But when the trend reverses, all of a sudden that gravity hits. When you're falling back to earth in a rocket, you ain't bouncing around no more. You're going down with it. And so, or some people say it's like riding the ocean. You know, when the tide is up, your boat rises up. When the tide is down, the boat swings down in the water, right? So stock prices tend to move with the overall market and economic conditions. So I'll say this, like, if you're a day trader, I wouldn't be too damn concerned if your trading plan is set for, 30-minute trades or whatever. I'm not in the day trading world. For a position trader, yeah, I pay attention to the economics of things, but I also understand that we're at a 200 EMA. It's a demand zone. It's been hit 5-6 times. There's no or no death cross. I'm not worried, right? Until I see the market really tanking. And I'm like, okay, what's my risk management? What's my trading plan say? Do I get the hell out of this position, or do I double down, right? Do I put a short-term put because we just hit a resistance? Like, I'm looking at NVIDIA here. It might have a resistance back here somewhere that I'm not seeing, but I'd have to go through the whole chart from monthly to weekly to daily to really gauge all that. So
yeah, I appreciate that, man, and the conversation about your trading plan, and you talking about PayPal and all that stuff. A lot of the things that you're in, I'm in as well, and I'm only in PayPal still because of my trading plan, to be frank with you. But I know a lot of the analysts are calling for upside, so I've got some long loops on those two, or position trades, as you say. So
right,
yeah, I appreciate
right.
Yeah, thanks,
absolutely, man. Yeah. And trading plan is so key, because what works for Jordan and makes him tens of thousands of dollars is totally different from what makes me tens of thousands of dollars, right? We could both have the same profits in a 3-month span, and I put one trade in, he put in 8, so totally different, right? But if your trading plan is cold and it's down pat, you're not really concerned with what's going on outside. You pay attention to it, but again, it's a system. You have to have a system that's been back tested, consistently profitable, works for you. Then the market conditions have less of an effect. They do have an effect, but less of one. Okay. Other questions?
Appreciate you.
Hey, let me jump in right here. And John, you can take the call on which way you want to go with this. What I would say is, I'd like for us to have questions either put in the chat while you're talking and presenting, or save to the end. So that way we make sure that we get at least everything you have that you want to give us. And then we can circle back to whatever, we have.
Right. So because I'm on my phone, the last thing I really wanted to show you guys is like some of the free materials that are out there. You're not going to be able to buy a Benzinga. You're not going to be able to buy a TradingView Premium, all these different premium packages at once. There's a lot of great free resources for fundamentals. Obviously, Yahoo Finance is a classic one. I have tons of stuff. I have bar chart on here. That has a great online platform. But you can get all kinds of fundamentals on here. I don't even know if I've used the cell phone app as much. Let me see. There's stockcharts.com. If you're looking for pure fundamental analysis, though, I would look at trading economics. Trading economics. Okay. So this is A1. I got this from what's that guy's name? I can't think of his name. He's a YouTube influencer that does a lot of fundamental analysis on stuff. Oh, I can't. Cleveland with a K. And he put me on game to tradingeconomics.com. This is like the premier. It has stocks, currencies, commodities, daily news, bond market stuff. I mean, you name it. And then the website is even more fleshed out. So you can go in here to news and you can see what each country is going through, and Brazilian equities, Uruguayan stuff, and US stock market news. And you can read up to date, like the Wall Street Journal, or if you had a Bloomberg terminal, like fundamental things going on in the market. And I promise you, the online website is way better because it has all this stuff like organized, for a laptop screen or a desktop screen to peruse through. So you can look at all kinds of metrics, and they have a heat map, so when things are going up and down, similar to FinViz. So that brings me to the next one, FinViz. You definitely want to check out. See if I can find Safari. FinViz. So FinViz, great free resource. You can actually pull up a stock and it will, let me see, so if we're pulling up, let's do PayPal. It'll actually put your technicals right on the screen for you. And it'll tell you like, oh, here's they have a 20, 50, and 200 EMA that they're following for you on PayPal. And you're seeing that the 20 is crossing the 50. Okay, that's bullish. And then sometimes they have support and resistance channels drawn on. It depends on the stock. It'll auto generate it for you along with, volume profile. And if you scroll down, it gives you a kind of heads up of some of the main fundamentals. So market cap, income, sales, book to share ratio, dividend yields. Hell, it even has employees, PE ratio, all this stuff, earnings per share, institutional ownership, 78%. Hope y'all see that. 78%. I mean, 78% of institutions out there on Wall Street are buying this shit. Like, hold on to it. It's not going anywhere. If you see stuff with like 30, 40% institutional ownership, I don't know. Maybe there's not as much confidence about this. Maybe, it could be a small growth stock. You never know. But you see high institutional ownership and an undervalued stock, that's a great sign. Then return on interest or return on equity and all this different stuff, 52-week range. So they have all kinds of stuff on FinViz that you can run through. Here's a backdrop for you. Here's a little cheat sheet. They have insider trading. Now, and this is a quote from another dude on Wall Street. He says there's hundreds of reasons. I can't remember the dude's name, but it was in a book. And he was a Wall Street trader for a number of years, spent his career on it. And he said there's 100 reasons that a company will sell a stock, or an inside owner will sell a stock, but there's one reason that they buy it, and that's because they think it's going up. Like I said, Jeff Bezos sells the hell out of his own company when he needs money. But if he's buying up Amazon, yeah, there's something going on. So you got latest insider trading that tells you what's happened in the last week or so. So all these have been reported from April 8th, maybe some April 7th down toward the end. So this is all actually April 8th. You'll see what I use is the top insider trading in the recent week. And I will go to filter, and in the top right, it says all transactions. I'm going to buy transactions. I could care less what they're selling. And this will tell you the actual name of the person who bought it, what their relationship is to the company. So CEO, directors, trustees, sometimes they'll say 10% owner. And if it's an owner-based thing and it's a buy, that tells you they have a lot of confidence in their company. And then it'll sort it by the dollar amount. So this person bought $75 million of Ares Capital Management, LLC Corp, or LLC. So for some reason, they thought that they need to buy $75 million of that stock, right? At $25 a share, 3 million shares. Okay. Somebody spent $14 million on Benjamin Franklin Resources, or Ben Franklin Resources, whatever. And you'll see some of these, the popular stocks in here from time to time. So Rocket Financial, or Rocket Mortgages, the CEO, Jay Farner, bought, about $3 million of his own stock, back on April 6th. Okay, so I'll pay attention to some of the insider trading, because if I've suspected and I've done my valuations, something seems undervalued, and there's a heavy amount of institutional buying or insider buying. Benzinga has a great platform if you pay for the paid subscription. It's a few $100s a year, but it'll give you, updates, and you can actually have notifications on, when insider puts a trade in, as the day progresses. And you can say, hey, I was looking at that stock. Somebody bought $40 million of it today. So when you've done your valuations, you've done your technical analysis, that can be another sign of confluence or further confirmation. And then you can look at 10% ownership. That's the third metric up here at the top. And that just tells you who are the 10% owners in that company, and if they bought more. So a 10% owner of Berkshire Hathaway just bought a bunch of Berkshire A stock between April 4th and April 6th to the amount of, about 300 something million dollars, maybe $400 million. So they see something good. And I've traded stocks that way, but this is just a further sign of confirmation. I'm not going to use insider trading as my end all be all. Like, oh, somebody bought $100 million, something, I'm gonna buy it too. But so FinViz, they have a lot of free fundamental resources. I talked about bar charts, stock charts. Trying to think, Yahoo Finance, they have their own little app. Yahoo Finance. So they have, news. You can search for company financials. Oh, they got something about Nashville. Look at that. But China EV makers, and then you can look for your own company. And they'll tell you what's trending. Dogecoin, bad fundamentals. So yeah, you can search Apple. They have crazy good financials, and then you can run through the summaries, key statistics. Again, they have all the key financials. You can run through that if you want, but those are the main ones I use. And then get to know a trading community. You guys can hit me up on email or whatever. I stay connected to 7-figure traders. Why? Because they're doing this too. And be like, what do you think about PayPal? What do you think about Square moving up $50 and beating the hell out of their own sector? And they're like, well, I think this and this, but their price to earnings ratio is just all screwed. Like I can't invest in that. Or they might say, hey, this is a great buy. Like me and Jordan and I were talking about Alibaba. That's been discussed in multiple trading communities I've been in. Like undervalued as hell. Like they're holding on to billions of dollars, and they're comparably the same size as Amazon. And I'm like, why is this not a $1,000, $1,500, $2,000 stock? But hey, so use the free resources, use your trading community. I think Benzinga and MarketWatch have some of the best paid financials though for fundamentals. And then if you just want a quick glance, you can go on the trading view like I showed you. But yeah. Anything else? Where's the call itself? Oh, how do I get back to Zoom?
Yeah, just stop sharing the screen. Hit the Zoom.
You said unshare it? Okay.
Yeah.
But yeah,
if you have any questions, go ahead, open the floor up. Now,
okay.
You're in the group chat, so drop that link to your book in the chat. Because I know we looked over it in person, and that was some heat, man. Please put that in the chat.
Okay. So I'll drop the link to that.
And if they have any questions, y'all can go ahead and unmute, put them in the chat. Maybe do 15 minutes or however long you're comfortable with, John.
Okay. If you guys have any questions, I'll try to answer them. Okay. Let me see if that actually goes to my book. Nope. It's the wrong link. I'll send you guys the link in a second here. But let me look through some of these questions really quick. hell, you could send it out in another one. I'm more interested in getting to the people's questions. Where's this chat thing? Chat. Okay, what did I miss? Trading, is that Yahoo Finance? What platform do I use to trade? E-Trade. E-Trade for me works. I know they're not, doing a lot of crazy stuff with my data. I'll occasionally play around with my Robinhood just because it's like a video game to me. It's fun, but I'm not putting more than $10,000 in Robinhood. I already know what's going on. What 4 stocks are you trading right now? What made you choose? What? Goddamn, like people are like, what's your watch list? Damn it. So I'm in Waste Management, I'm in PayPal, I'm in Square, and I'm in Alibaba. What made me choose them? Well, pretty much everything I discussed and everything that's in my ebooks. So I have a fundamental analysis trading plan, and then I have a technical analysis trading plan. I'll run that by Joe. He's my partner in crime. We'll both go over those individually because, again, he's got a brain, I've got a brain. He might have saw something that I missed, and then I'll run it in one of my chats. I'm in a bunch of trading chats. What do y'all think about Square's fundamentals? So that's how I pick them. Is that Yahoo Finance trading view? Thanks. What's the app you're using for finding the financial info? I'm not sure what app you meant. I mean, I showed you the ones that I use. Yahoo Finance. I use Trading Economics, FinViz. Yeah, I mean, I use different ones, right? And there's different metrics that you can find within those. I can't explain all of it, but one of the metrics I use is call to put or put to call ratios and put to call open interest ratios. And you find that on bar chart. And I know that because Jordan was like, yeah, I go to bar chart. I'm like, me too. What's the are those lines Bollinger Bands? It might have been if they were the little blue lines. Yeah, Bollingers. But if they were the yellow, orange, and red lines, that's an EMA ribbon. So it's 4 different EMAs. Can you repeat the name of the person who said that? Okay, I don't know who said what, but I've discussed Richard Currents. He's a VP of risk management at Goldman Sachs. I spoke to Jake Kasparian as well in the last few weeks. He is a wealth manager based in Wisconsin. I'm not sure what was said, but I missed that question while I was talking. Who was it that made over 2 million? Oh, that was Jake. That's my guy. Considering you're mostly focused on long-term fundamentals, I'd appreciate your opinion on what you think about Facebook. Ooh, don't ask me about Facebook. That's my secret. That's my other baby. That might be my 5th position. Do you think they're falling out of date? The metaverse is a smart move, is a lifelong. What do I think? Facebook ain't going nowhere, goddammit. And if they do go somewhere, they're gonna relabel it as Meta. They're gonna call it Meta. And whatever they're doing with the virtual reality goggles, I saw people going to college in the metaverse. Facebook has so much free cash flow, it's sick. Like they have like country level money, and they got it through like advertising. So no, Facebook ain't going nowhere. I'm kind of like, I'm skeptical of a lot of shit. When I saw Facebook, go to the, poop the bed, I was like, no. They left a huge gap, and as you all know, if you do technicals, gaps have to fill. And that little thing over Europe, that's going to get solved in some contracts because there's way too much money in Facebook to go away. And they can call it whatever the hell they want. Meta, Facebook, Instagram, I don't care. Like, that's a huge ass company. Are shares giving as an employment package considering when looking at these fundamentals? Okay, I think you're asking like when people work for a company and they get like, preferred stock. Yeah, so that gets factored into the fundamentals. Yeah. Do you use a VI indicator? I'm not sure what that is. What is your take on SoFi? SoFi is a great one. I mean, they just bought rights to the name of a stadium in Los Angeles. Like, I think they're messing with SoFi because I don't know. That's a Generation Z stock. They're like, oh my gosh, I like SoFi. You go in there and it has all these little algorithms that calculate what you need to do to get your credit score right. how much money you spent this week, and they have so many hundreds of metrics. It's cool. Like they use really great algorithms, and yeah, they're popular. A lot of people use them. They have a stadium. They're not going anywhere. They're messing with it. They're probably, I bet you a bunch of banks are trying to get the lowest possible price and scare all the little, what they call shaking the trees. They're trying to get all the little retail traders out, and then they're going to jack it up. So yeah, that might be a good position trade. As it relates to your long-term options, how do you decide on the strike price? How do I decide? So I kind of follow Tay. Like I like Tay's philosophy, and I like. Sorry, you say something, George? Hello. Sorry.
No, I didn't, bro. I think they just unmuted themselves on accident.
Oh, okay. Anyway, sorry, it was just kind of weird. All right. I like Tay Sweat. He's one of my mentors. He buys a little bit out of the money. Sometimes I'll go a little out of the money just so I can get a cheaper contract and I can pick up a couple more. But here's why I stick close to the money, but slightly out of the money. For one, like in the case of PayPal, which I bought, I think $120, excuse me, as my strike price. It only needs to move $10 in the next year or whatever I bought, 2 years, for me to break even. And then, like, say it goes to like 150 by the summer or by fall. Okay, I'm heavily in the money, and that intrinsic value starts to set in that contract. And so even if it dips back to 140, even if it dips back to 135, whatever, I'm good because I'm still deep in the money. If I go too far out, it's like, I don't know if there's a great analogy to this, but you want to be sitting right upside of the price. It's like if you're in a dangerous area and you got a bodyguard, right? You want him around you. You know, you don't want him up on your shoulder and looking suspicious and crazy, but you want him around checking the scene. And the same way, you don't want him too far away or sitting in his car playing, on his cell phone, because if some things pop off, he can't do his job. So it's like you want him around, but like, so you want to be close to the stock money, the strike price, but you don't want to way far out because it might never hit that strike price in a reasonable time, and that intrinsic value will never set into the contract, right? And if you buy it too far in the money, it takes longer for the intrinsic value to set in, and it's not as much. Like if you buy PayPal like $90 strike price, like it's not gonna move a whole lot. So I like it slightly out of the money, so I'm deep in profit when it makes its move. All right, so that answers most of that. I'm gonna see if I can find my I was looking for something in my other set of keys. But anyway, I hope that answers everyone's questions.
John,
You said what now?
I said, get us that link to the book.
Oh yeah. I got you a link to the book for sure. But I'm trying to drop as many bags as I can in this little time we have, because you guys have a great group. And I love the energy that comes from it. So, just try to support as much as I can, really. But hopefully that gave you guys some inside knowledge. And this literally came from people making tens of millions of dollars doing this stuff. So, if I can over deliver, I feel like I did something. And if you have any more questions, I'll for sure leave my information in there. You can text me, you can email me, whatever. We're trying to get everybody rich, or at least comfortable, well off. It won't let me. Oh, won't let me send. I don't know.
Whatever you're trying to do, just text it to me, and I'll go ahead and drop everything in the chat once we're done here. So are you already wrapping up the Zoom now? Yeah.
Oh, here it is. I kept sending it to one guy. Sorry, Anthony. I was like, send. I'm looking at the group chat, like, why is it not going? He probably has like 15 messages from me. Sorry. But that's the link to our book. That's the book bundle. And if y'all want an individual book, just hit up this email and I got you covered. But any other questions? Any other questions before I hit up out of here? And thank you guys for showing up. Awesome. Love it. And I'll drop my phone number in here. Shit, why not? Just don't blow up my stuff with random, you know.
They're gonna text you every day and say, "What you buy? What we buying? What we buying?"
Yeah. Don't be texting me at 5 in the morning like, NVIDIA's sinking. What do I do? I'll just message. But yeah, I cannot find my keys. Anyway.
Thanks for coming on, John. Like I said, shoot me those links too, and I'll drop it in the announcements channel. So
Okay.
along with the replay of this recording, so anybody who missed it can have access to it, have access to you and your contact, and get that book, dude. Like I said, we were looking at it, and I was like, damn, this stuff I ain't even know. I thought I knew a lot.
Any good books on options trading? Shit, my ebook. But no. How to day trade for a living was a great one. I'm trying to think because I learned through, I'll be honest, I learned options trading through YouTube videos. There's a lot of great YouTube platformers. I used Jason Brown. I used what's that guy's name? Was it Adam Koo? Maybe it was Adam Koo who did options. But I read textbooks. I'll be honest. I read Intro to Investing, 11th edition. I read Fundamentals of Macroeconomics. I read, there's one written. I'll have to look them up. I'll post them on my page or something. Y'all can go to that. We're at Nashville Investors, Crypto and Stocks on Facebook. Just ask to join the group. We have tons of free information there. We're trying to be like Boston, Omaha. Like trading is named after Nashville. But there's a lot of books. How to Day Trade for a Living was probably my favorite one. Oh, Mastering the Trade by John Carter. And really, John Carter is a beast. But really, you can use books on stocks themselves to learn about options. Like once you understand how the stock market itself works, options is just another avenue to making money. It's a leveraged way of making money. Options trading is literally like when you go to Sam's Club and you need a can of carrots, and you go to Kroger, you paying like $1 for a can of carrots, 75 cents, whatever it is. But you go to fucking Sam's Club, you get 100 cans of carrots in a pack for like $15. That's basically what options is. It gives you the right to own 100 stocks at a very low price, which they set at a premium. And then obviously, if you want to exercise, you got to pay up, full amount of money, but you're able to leverage a lot more with less. So I would say any book on trading. I liked Mastering the Trade. I like How to Day Trade for a Living. What else? And then other books about building wealth. The Richest Man in Babylon. There's 100 Baggers. That's a great one. 100 Baggers is about stocks that multiply 100 times their original value. They talk about the story of Monster.com, Amazon, some of those stocks that just flew to the roof. Those are all great books. Let's see if I catch any more chats. Thank you. Hey, thank you guys. Like, thanks for taking interest in trading, like taking it seriously. The Nashville group again, I'll drop that in there. Nashville Investors, Crypto and Stock. Okay. I recommend checking out Trading in the Zone by Mark. Yeah, that's another great one. Trading in the Zone is a great book. Yep. So that's all I got, really. Any questions before I go? That's 8:30. That's all I got for you guys. But thanks again for having me, Jordan. We'll probably link up later. You know how we do.
Yeah.
Another thing we've been talking about for at least this little collaboration we did over the last couple of days, I might be sending y'all some like trade ideas or some little YouTube videos I do on trade ideas. And they're like 7 to 10 minute videos on like the fundamentals and the economics of it. And I'll discuss all, goddamn, if you text me a stock, I'll probably discuss it. And then I'll look at the technicals and go through my little formula, and you guys can follow along. So we all trying to get to the bag, like for real.
Sir, look, thanks again, John. And yeah, we'll definitely catch up before I head out of Nashville.
He said honey baggers. 100 baggers. We'll be calling you. Uh-oh. Let me go on and slide up out of here. No, I'm just kidding.
Yeah.
I appreciate
Give me those links. Any link you want shared in the group, like I said, just text it to my phone, man.
Okay.
Once you close the Zoom off, it's not there. But I'll put it in the chat, put out an announcement, thanking everybody, thanking you. Yeah, anything you want, contact information, go with that message, just shoot it over to me. Thanks again for coming on. You're the host, so when it in meeting, but thanks again.
All right, yeah, I'm new to this. The last thing, I'll drop y'all one more big bag. All right, any questions you give to me, I'll run it by my experts, right? I'll run it by Rich. I'll run it by Jake. I'll run it by Tay. I'll run it by anybody. And like whoever's the expert at that, I'll run it by them before I give y'all the answer back. Like I could do you that, pull on some of my resources to help y'all get more in-depth, verified knowledge. So, but yeah, thanks again, y'all. I'm up out of here. I got to run to dinner. But yeah, we'll be linking up. All right. Peace. Thank you. You're welcome. All right, y'all.